Trump launches a full-scale tariff war, and markets didn't laugh this time. A 10% baseline hit on all imports. China gets slammed with 104%, and the S&P sheds trillions before clawing back. Bitcoin tanks, oil drops, and the world reacts. This is a market episode you cannot miss. Welcome to After Hours at Traders Pulse for April 11th, 2025. I'm one of your hosts, Tom Hartman, joined tonight by Mike, the Candle King, Christensen, to dissect the chaos. After Hours is your go-to for sharp, trader-focused market commentary powered by Traders Pulse, the ultimate automated trading platform. But more on that later. For now, Mike, this week, it's the year of Trump so far, and soon to be the decade of Trump, I'm sure. How's it going for you?
Doing well. Definitely a crazy week. Interestingly, I did not trade as much as I thought I would. I did pretty well in a few accounts, mostly prop firm accounts. But it's been so volatile. It's actually been kind of a market that I've wanted to step away from a little bit. I mean, we hit some of the most volatile days ever in at least my trading history. And I've been at this for over 14 years now. And that was an insane week for anybody who's actively in markets. I'm sure you've seen some stuff, this week that you've never seen before. Certainly that bull candle is the biggest recovery I've ever seen in terms of overall percentage returns. I ended up calculating it out as a 7 sigma event, which is just incredibly rare to see happen.
Okay, so we have to, from now on, I'm going to be referring to Trump as 7 Sigma Trump because he seems to be able to bring that to the markets.
For sure.
I had a different effect. I had the best trading I've ever done. I mean, not ever, but as far as successful trades are concerned. Peter can attest to this. My brother can attest to this. I was just nailing every single move because the moves are wide enough that I could call where things are going to go. The reason I laugh is that the reason I was able to call all this stuff is all the things you've told me over the last year. I used all that information. I was able to trade it perfectly, and I just felt so relieved that I didn't blow out 3 accounts and 2 prop firms trying to chase all the volatility. I was able to do it.
Right.
So I'm actually happy Trump.
I mean, in generally, we wait for volatility, right? We want to see the VIX above 20 before we start getting interested. But when the VIX skyrockets to over 50 in less than a couple of days, that's pretty scary. I'm surprised you was it mostly in crypto that you managed that, or was it all in stocks?
Only crypto.
Only crypto. Okay.
Yeah, that for some reason follows technical analysis exactly. There was some I could have done a little bit in the SPY, but I find if I'm just I'm thinking about 2 different assets, forget it. I let one bleed into the other, and I can't really think about it. Yeah, so I'm not big on that.
Well, I guess that was kind of the interesting thing is that crypto didn't really seem to respond as violently as the stock market did. Is that at least that was my take on the whole thing. The sell-off was correlated for sure, but it seemed like crypto had less of a volatile sell-off than I expected, and it really kind of specifically Bitcoin only came back to that support zone that we were anticipating, which was at the $74,000 level. We've been talking about that for a while.
Oh, that's right. And so the fact that it didn't actually break below the 72 to 75 level,
Right.
to me was super bullish.
Yeah.
I mean, in fact, when it hit the candle 74.6, and I missed my entry, my perfect entry by $600, actually by $400, I was very upset. I got in a little bit later on, and I'm up right now, but whatever, it would have been perfect. I mean, everybody and their mother was messaging me going, the cycle's over and Bitcoin is dead. And because if the cycle's over here for Bitcoin, the idea is that not only is the cycle dead, but it was so truncated that that's the end of all cycles for Bitcoin. I mean, I don't know if people were coming at you with the same thing, but people were just like, the sky is falling. And I was just holding my line. I go, old Tom, loser Tom, the Tom who just loses, college funds for children, that Tom, he would have been swayed by all the narrative. But I remember March 2020, and I how I just sold everything right at the bottom as everything V'd back up.
Right,
And so I
right.
was expecting, I was like, until it confirms, that was in my head, my confirmation, until it confirms the breakdown, I'm still on a bull trend, long-term bull trend, and that's what I'm going for.
Got it. Got it. Well, you absolutely nailed it then if that's what you were aiming for. And what's funny is that we were talking about that potentially being the support zone. So obviously that explains why you went ahead and just bought those bottom wicks. I find it impressive that you're able to do that. I would be waiting for about right now to get in just because that wasn't confirmation for me. We saw the bounce, but then there was an immediate sell off the next day on Bitcoin. And I think that was the one that kind of had me worried that we would go back and retest 74 and potentially go further down. But that's not what happened. We actually found support and then the whole market roared up. So interesting to see. How does that align on your side as we look at the global liquidity index?
Yeah, so I was just about to bring that up because that's the thing that like matters the most here for me. If I let me just share that here real quick. All right, so if we take a look at M2, and this is what we were talking about for weeks. The We have a bullish setup here for liquidity, and it started in January 2025, and it doesn't matter what happens really in the short term. This is still bleeding through into the markets, especially with the dollar falling recently. We even have a higher still high in liquidity 90 days out, and so I thought to myself, there's two things. The last Friday we were looking at Bitcoin, and although the stock market had dropped like 6% or Nasdaq 6%, Bitcoin was up 80 basis points.
Right,
I was
right.
like, "What is going on?"
Yeah, what is going on here in crypto?
There's supportive flows there, and
Mhm.
then when we did get the drop off that weekend, um, I know you were telling me, Tom, it's gonna be another low. I was like, okay, let's see if it's gonna be another low, and then there was. We dropped 3% on the right after hours. We dropped another 3%, and then some more afterwards. I
Mhm.
was okay. I'm expecting a 15% down, just to negate the bull case or whatever. No, it bounced at 74.6, and we got the right up. And so to me, that was like a clear sign that these flows are actually still bleeding through. Like it's been discounted by a lot of people, but they're still there. That
Mhm.
money, that in a sense, that flow is still there. And so when I was taking a look at the, just pull this up real quick. You and I was so when I was trading it, let me just make it a little bit clearer. The idea here is that all these moves happened exactly to the VWAP levels that we've been talking about. Like this is where everything crossed. There was like no mystery as to where the price might actually go, and it was sort of like being able to see the Bitcoin walk through these markets. So I think that was pretty interesting. The liquidity indication is still showing that it's strong. It has not been negated, and if that's not the case, then I'm still in the vein of all-time highs for Bitcoin over the next 3 months. Like, I still have that in mind.
Interesting to see. And in general, this is just what I love about crypto is that it's a very technical asset. There's not a lot behind it that tends to push price in one direction or another from a fundamental or global macro perspective. I think some of that has some bearing on price, but in general, it's a very technical asset. So nice to see the support bottoming there. What are your thoughts in general on where you think the market might be? The headline of the show here is obviously if we bottomed in the market or not. Where are you thinking on that?
Yeah, so I do think we bottom short term. And actually, I'll go through a couple of those different points here, but I do think we've bottomed. But I do believe we're potentially in a stagflation environment, but I do think that this stagflation affects equities in the bond market more than crypto. I'm not completely sure about that yet, but I do think that's the case, where crypto will act more like gold and get a big run up, whereas the stock market, I think, at most we touch all time highs again and then roll over again for the next 3 years of a bear market. That's what I'm anticipating. But
Got
I
it.
think we get back to at least peaking to all-time highs before we roll over. So I just wanted to go over some of the points today. So at the top of the show, we talked about the tariffs, just in case people haven't been following it. This is just the timeline of what happened. So January 2025, we had Trump who announced that tariffs are going to be placed. A lot of people didn't believe him. People thought it was just all talk. Okay, fine. There's a lot of rhetoric around that. March, it was confirmed a leak of that 10% blanket tariffs across basically all nations. Um, then April 5th comes out, and like the tariff sheet comes out, the LM based tariff numbers were issued, and then the market drops like 5% or more. Tech, retail, and industrials are hit hard. April 9th in the morning, surprise, country specific tariffs dropped. China slaps a 104% tariff on the United States. I'm sorry. No, they slapped a 35% tariff on the United States, and Trump retaliated immediately with a 104% tariff, which to me was so much like, I am rubber, you are glue. Nuh-uh, I'm bigger than you. Like, I could not believe that that was actually happening. I don't know how you felt about that. Waking up and they're like, hey, you wake up and China overnight said 35% tariffs on the United States. And then later that day or whatever the day after, 104% tariffs on China. Did I hit you as like grown up?
No, I mean it all feels unnecessarily tit for tat, and it just it doesn't seem to follow a playbook that any of us are really used to, and obviously it's confounded many economists as well. I think that's what's led to much of the uncertainty in these markets because it's unclear what the real objective is here. What's the outcome we're hoping for? That said, it'll be interesting to see how things unfold for here from here. I wouldn't want to underestimate the Chinese government or Chinese economy at this point, though.
Well, the case for the tariffs was like sort of like people are sort of apologetic for it to a certain degree because we did get 3.9% on the 10-year last week. And then it exploded up to 4.5%.
Mhm.
So like, and when that happened on April 9th, Trump pauses the tariffs for 90 days. Markets rebound, closing down just 3%. So
Right.
just to make clear here, and something I always bring up to everybody I ever talk to, the government, they care about markets, but they don't care as much about the stock market as they do about the bond
Bond
market.
market, absolutely.
So as soon as that hit, that was shoot up to 4.5%. You gotta know billionaires and sovereign nations are calling Donald Trump, going, "Look, I get it. I get it. You want to have leverage and all this. You just don't understand. This whole thing is a house of cards.
Hmm.
Okay, it's all a house of cards, and it's all dependent on you guys being the source of liquidity for treasuries, and we have to sell our treasuries now in order to get dollars. That's what we have to do. We have to sell our treasuries. In fact, I want to play a video about that in a second, just to recap it for people. But that was amazing. So as soon as that happened, as soon as I saw the bond market there shoot up, Mike, I was like, great, that's it. Tariffs are rolling back. Bottoms in. It was either that or the Fed was going to come out with some announcement of saying, "Hey, we got to support the markets." Blah blah blah. But there's no chance bond yields jump up from 3.9 to 4.5%, and it keeps on going. I mean, not at all. Um, all right, so we have the market sell-off. $6.6 trillion were shed from the S&P, which I always find that number to be sort of silly. Like it's like when a crypto market cap is like, our market cap is $6.9 billion. Okay, fine, but you're like Pepe the coin. Like it's not
Right.
really there.
Right.
Global equities lose 10 trillion. Oil drops to $57 a barrel. That that is something, to drop
Hmm.
oil to $57. They don't want oil. The world does not want oil at $57 a barrel because oil, any oil producing nation uses oil in order to get the currency, the US dollar currency that they need. And then Bitcoin was down 30% since January. A couple of things of note: banks with global exposure slumped. Import heavy industries tanked. Dollar strengthened. If you remember, dollar strengthened a little bit in that move,
That's
and
right.
then volatility spiked across the board. So that was pretty good. So I was hoping just to play here a video from whenever there's problems within the plumbing of the financial system. I go to Jeff Snyder. Jeff Snyder is I think he's an RIA, but he's like super wonky when it comes to the plumbing of the what's called the Eurodollar system, the global dollar system, and I mean, I know he looks like a caveman, so forgive the haircut and the expression, but he really is knowledgeable. In fact, I want my knowledgeableness to come from a guy who looks like this, not from Jamie Dimon or anything like that. So I like this guy's look, but let's just take a look at a couple of things he has to say.
Financial markets worldwide are in chaos. They're being liquidated. And yet, treasury yields are soaring higher. Shouldn't they be falling? Shouldn't there be a desperate flight to safety given everything that's going on? It doesn't seem to make much sense. And of course, the mainstream offers zero help, it has zero answers. And the reason why treasury yields are going higher has everything to do with the one thing we can't talk about that's a monetary shortage. The selling in treasuries is being triggered by an increasingly desperate dollar shortage. In fact, I just did a video about this not even 2 weeks ago, the one on the proposed hedge fund bailout. And here we are. This is it. The main takeaway from that video was that if we saw the conditions which would require a hedge fund bailout, basically what we're seeing now, what that would mean is a desperate dollar problem in repo markets. The rest of the mainstream is going to focus on the treasury market or the hedge funds doing the selling, when what really matters, the only part that truly matters, is why they're selling in the first place. And hedge funds aren't the only ones either. Reserve managers, foreign reserve managers, they're doing it too, which is why the treasury sell-off began Monday morning when it did. The hedge funds are coming in after it triggered, indicating an escalation off in the shadows of the Eurodollar black hole.
Just Snyder, his whole thing is that we're actually in a dollar shortage.
Mhm.
There's not enough U.S. dollar supply in the market. This is what we've been talking about for months now, and most people think that the dollar's crashing. The dollar is not crashing. The dollar is too strong. That's the problem. And so the bond yields initially fell down to 3.9% because of a flight to safety that we all know that trade.
Right.
Sell the high beta assets, sell the risky assets, and go into something safer.
Go
There's
into
something
treasury.
safer than the treasury. Exactly.
Same thing for
Um,
gold, which is why we saw some rallies there.
that's right. But then we had the spike up because if there's a blow up, especially in the repo market, they need to and the bonds are used as collateral, and the dollars are needed. They have to sell the bonds in order to collect the dollars.
Mhm.
So bonds are actually more liquid than cash. Ironically, I don't know where I was when I first heard about that, but I was like, oh my god. Institutions and sovereign nations, whatever, bonds are easier to move around than cash is. But the reason why they want them is that they could sell the bonds in order to actually get the dollars that they need in order to manage positions or pay for whatever. And so you get this sharp price up because all around the world, countries we're just selling the treasuries immediately in order to get dollars because they're like, we don't know what's going to happen. We're getting tariffs. We're not enough money. So that's pretty interesting. Just to jump over here to everyone's been talking now about the basis trade. The idea is that the U.S. economy is, or the global financial system really is supported by this basis trade that happens because of the differential between yields and the different yields in different countries. So I just want to bring this up real quick here.
Relatively new phenomenon that has been added to this certainly over the last 5, 6, 7 years, going back to 2017 and 2018, is this basis trade. If you want more details, like I said, on the basis trade, check out that video on March 28th. For now, what you need to know, basically hedge funds are arbitraging a difference between futures market prices for US treasuries and the cash market. So they go short the futures market and go long cash US treasuries. But going long cash US treasury requires maximum leverage, which is provided by the repo market, especially where you can get a zero haircut offshore. So they're funding part of the trade, the key part of the trade in the repo market. And it works really good for the hedge funds as well as the US Treasury, by the way, until that repo market funding doesn't roll over so easily. So like March of 2020, when repo is a problem, basis trade hedge funds are forced to sell. They have to liquidate their positions to cover the loans. They have to pay them back by selling the US Treasury because the equity that they put up is really
idea there. So they use hedge funds use this basis trade in order to finance some of their operations, but it's very dependent on the liquidity within the repo market space. And if everyone's going to the doors at the same time, well, then you get this thing where the collateral that they put up in order to get the cash gets liquidated by the person who owns that debt. And then finally, for credit spreads over here, which I think Mike, you want to bring up in a bit.
Utterly blown out in a way that we've seen only during the early stages of crisis periods. Now we aren't to a crisis yet, but everything is starting to line up in these various ways. Credit spreads is a big one. They were utterly, almost historically low back in February when everybody's buying into Jay Powell's bull about strong and resilient. So you had credit spreads that were way too low, which meant that if the narrative were ever to be challenged, which is what we're seeing now, everybody would run for the exits all at once. And that's what's been building over the last month, really the last couple of weeks. We've seen the triple Cs, which are the worst of the worst, the triple C rated junk index, blow past 1,100 basis points in spread just in the last couple of days. We're talking about a 400 basis point move, which is a big move in a short period of time. One that I want to focus on here is ICE Bank of America's best.
That's the idea there. So the credit spreads are also a sign of the availability of credit funding within the markets, and the wider the spread is, the more volatile it is, and the more it's an indication that there's distrust within the system. So this 11% difference is saying, no, no, you're going to have to pay up a lot more interest for me to risk taking on your debt, and
That's
you
right.
get these right credit spreads, which is like horrible for the systems who are depending on this, steady credit spreads where it allows it to fund different types of operations.
Yeah.
But what have you been seeing as far as
Well, it's
spreads are
fair.
concerned?
It's fair to point out here that spread is obviously much smaller on the AA rated bonds, corporate bonds, rather than
Right.
the triple C that he's looking at there. So right now I'm looking at a 2% spread, but even still, this massive increase, or really kind of sharp turnaround or mean reversion that we're seeing in Treasury yields relative to the corporate bond market is concerning, obviously. So that's it's the same signal even on AA rated, even
That's
if
right.
it's
So
small.
yeah, when you get so people will often look at the junkier bonds in order to see the canary in the coal mines, and then if that continues, it bleeds through to the AAA,
Right.
which makes total sense. And so as an early indicator, that's what he was saying before. Is the crisis here right now? No. Like the full crisis, the Peter Schiff type of the world is fallen crisis, that's not here yet, but it's an indication that these cracks are actually forming. And that, Mike, to me, is the most bullish news of all because the Fed comes in guns ablazing when things like this happen. So remember, Silicon Valley Bank blows up, Fed comes in, okay, we didn't see it coming, but let's try to fix the system. And people were talking so much then about it was Silicon Valley Bank, SVG, I think, and then Citibank. I
Mhm.
think Citibank fell, um, and the talk back then, if you look at the doomsdayers online, was okay. That's it. The entire financial system's collapsed. This is the beginning of the domino. But since 2009, we know the formula. Fed comes in, prints money, does what it needs to do in order to save the system. And so that's why I don't. I mean, we had all-time highs after that. I don't know why people keep forgetting. We got all-time highs after that. We had all-time highs after 2020. We had all-time highs after the Vault again, and we have all-time highs after all of them. So that's why I'm still expecting like a massive rebound. Let Seven Sigma Trump keep talking, and we're gonna get uh, S&P back and Nasdaq back to all-time highs.
Well, that could be
Um,
pretty interesting. One thing I keep trying to look to is the futures market around their probabilities for Fed fund rates changing. I think there was some talk in Twitter that there may be an emergency meeting from the Fed. It doesn't seem like there's any sign of that officially yet. But some of this expectation that we continue to pause rates on the May 7th meeting hasn't really changed all that much. So I kind of expected that probability would increase over this past week, and indeed it actually decreased. That probability went down to about 55%, but then completely turned around back again. So it looks like the futures market is confident with about an 80% probability that we're going to pause rates at the next meeting on May 7th. And then it seems like that expectation to either continue or to cut rates by 25 basis points went up to about 63%. So really interesting to see how quickly the futures market respond to this event as well.
So on Poly Market, I like betting on Fed rates. It's my sports thing. Poly Market, Fed rates.
That's your
And,
fantasy football.
exactly. And I love taking like a 1 penny, two penny bet on like what the Fed will do, because what will happen in the interim is that when you get a volatility event like we just saw, um, those Poly Market bets will go massively in your favor temporarily, and you could cash them out earlier. I don't cash them out early because I like riding things all the way to the ground.
Mhm.
But my position of that the Fed would cut rates by 50 basis points in May, like jumped up 100%, which was like fantastic. I love that sort of thing. And you can bet on these things happening with Trump around because he's Seven Sigma Trump. It's just all the time. It's always happening. All these crazy things
Craziest
every
things
month.
we're ever going to see are going to happen in markets here. Yep.
That's right. Now the here's the thing. I don't you know I didn't even pull the story today because it was just too hearsay, too much gossip. But there is some scuttlebutt that Trump is going to get Powell removed, and if that gains traction, well, we know what that means. He's going to remove Powell. Someone else comes in, zero interest rates.
Okay. So obviously that's not permitted by the law, which would be Powell's response to that. You can't
The
just
law,
you
the
just can't you
law.
can't just remove him. So the scuttlebug. What? Tell me more about that. What is circulating for rumors?
So there's something called the Humphrey rule or something like that prevents the executive branch from doing certain things with administrative heads of certain departments. And in the whole Doge thing, there's something going through the courts in order to try to undo that rule. I'm getting the name wrong and all that, but it's the idea. But one of the side effects of that is that the Fed would not be exempt from that, and Powell could then be removed. Um, and Trump has been forceful, basically telling Powell, "You got to bring rates down."
Hmm.
He's flat out saying it. I mean, occasionally a president will talk about to the Fed that they should lower raise rates, but it's usually with like the utter deference to the Fed chair.
Sure.
Bernanke was never like, well, they'll get questioned by Congress. Oh, you should be doing this. People are suffering or whatever, but it's never like, oh, you're going to be fired. They always go, thank you so much for your time and talking to us. It's so gracious for you to give us a moment of your time. Excuse me, are they royalty?
They- no.
They should be, though. They should be. Powell, you should be royalty. So we'll see if that actually goes through. The reason I bring that up is that if that happens, then I would take a bet immediately interest rates are going to zero. And how does that not make, at least in sentiment wise, a rally to beat all rallies? How's that not a 15% up move in a day?
I mean, it could be very positive. There's no question. However, I think there's also some people who would remind everyone that a reduction in interest rates is often an early signal of a recession. So while that could be short term positive, could be long term negative. Long term negative.
Right. Well, I mean, generally it is always negative because you always want rates to be up and sloping upwards. You want it to be a little bit higher now and sloping in the future. Zero interest rates is a sign that the system is like completely broken, and that's how you get a dislocation between the rich and the poor. But that's not what we're here for. We're here for trading markets. And I'm not saying he should get zero interest rates. I'm saying if he does, I'm not going to be sitting on the sidelines here. I am going to go full bore long Bitcoin as hard as I possibly can.
Understood. That
Um,
makes perfect sense.
you
And
can see me sell one
given
of my
where we
shows
saw
at
our
the
recent support level, that could be a pretty good play.
exactly. So we'll see how that goes. Now, okay. So just moving along here, I just wanted to make the case here. Um, the FinTwit world, I mean, it's doomsday on steroids. I mean, you throw a rock and it's easy to find people pointing out breaks within the system. If it's like what's going on with the yen, if it's what's going on with credit spreads, if it's what's happening inside of the repo market, I mean, you can find all kinds of stuff showing up. So you know what? I don't even think we need to go through the bear case of what's going on, because I think we've all heard the bear case constantly all over the place.
Right.
But the short-term bull case, there was something I thought was particularly interesting. Let me pull this up here, where forgive me, I had the wrong link. So Tier 1 Alpha had put out this tweet. I follow Tier 1 Alpha because they have great information about gamma in the markets. Basically options information that lets us see what the market makers are doing in the markets. And if we take a look here at, where was it? So here on April 10th, we had this. This is just a distribution showing how many assets were in the red for the stock market for that day versus in the green. And it was just this highly volatile. I mean, most of the stocks were down, especially the major ones were down. But then, where was it over here? This one. This is 3 hours ago. Today's SPX breadth profile almost looks, dare I say, normal. Odd way to close out such a tumultuous week. This I find, Mike, the most fascinating, right? This is sort of like, it's like the market always wants to go up, in a sense. It always wants to go up, and
Sure.
you have these massive volatility spikes, and then we get like essentially a normal day. That's the part that's just as weird as the Seven Sigma event, that we didn't get this follow through to more downside. And this is what I'm talking about. This is the when you're looking for the cracks in the system, they're everywhere. They're there all the time. There's no shortage of that. But you see things like this where, okay, it's stable. We just moved up. We just moved up to, what was it? This S&P's back to 200-day moving average.
Hmm.
It seems calm. People are not panicking into the weekend. You're like, "Okay, what's going on here over here?"
Well, and
Um,
I think a lot of that analysis even showed up on price action. And many yesterday, if you had looked at the charts and basically went into a coma for a week, the market was actually up 1%. So if you ignored all that volatility in the middle, you'd be like, oh, okay, things are looking go okay.
That's right. Well, actually, I'm glad you brought that up, because I wanted to bring that as my last point for the bull case. There's actually some interesting things to look at. I mean, the bull case, the biggest point of the bull case is that we're not in crisis yet. We saw the first signs, and to me, there's nothing more bullish than we're not in crisis yet,
Mhm.
because it gets people thinking, it gets people moving. Let me just share my chart here for here. So, okay, so if we take a look at Nvidia, so there's a bunch of these assets that had these massive rallies. So this rally up over here was like something like 30%. I mean,
Mhm.
did you see that? And
And
it's
for a
not
mega
just
cap
there.
company, that's incredible.
That's right. So we were talking about on one of the previous episodes that when we get down to the yearly, well, what's my yearly average? That's to me is where I always look for the first major bounce and potential for support, at least for a trade or if you're going to go in long. And that's exactly what we had. So it's a natural bounce from over here. We had, if we take a look at uh, what was the other one? Netflix. Pull up real quick. Nice bounce, 11%. But there's actually been quite a number of stocks that actually rallied more than you would have anticipated in such an environment. Forgive me, I had a whole list here, but we'll touch on that in the smaller news segment. But we got massive jumps here. If we actually take a look at HIMS, you'll see it's like got down to the low end of its range, right? For HIMS, I'd be looking for a bounce around here, and things seem to have settled down. To me, this is pretty bullish to see some of the stock.
Yeah, a fair analysis on the option side as well. And even just looking at technicals, we're starting to move over the shorter term averages. We're starting to see some confirmation that there could be a bull case to the upside. I'm definitely very curious to see how next week shakes out.
Right. What were you saying before about the some other markets abroad are actually doing better than expected or than one might expect?
Well, sure. One of the other trades that was circulating on Twitter was just trying to look at emerging markets. As the dollar starts to fall, you start to wonder how things are going. And I've got my chart of all of my different overlaid ETFs and different assets here. Um, One of the things that I look at is the Eurozone ETF as well as the Chinese market ETF. That's EZU and FXI. And interestingly, year to date, those two ETFs are now the second and third best performing assets among all the ones that I look at. This is all the sector ETFs. Gold is up 21%. Um, uh, uh, Consumer cyclicals is up. Value is slightly down. Treasuries are slightly down. Financial sector is down about 3%. Obviously, the areas and sectors that took the worst hits are the technology sector, the Qs, growth, that kind of stuff. That's all down 10 and 15%. But to find the Eurozone and Chinese markets up is actually really quite interesting to me, especially since they were starting to fall with the rest of the market over the last week, but they rallied back over this week. So I think that's some indication that the markets are starting to start to rotate into emerging markets.
Interesting. For China, is it so over there? We're looking at the performance relative to each other, right?
Yeah, this is a percentage overlay. So this is just looking at year to date and over all of these assets and just the percentage return.
Okay, so they might still be down for, let's say, the year or whatever, but they're showing signs of bouncing back up and like revival.
Well, year to date, those two are actually up. So FXI is up 10%, and Eurozone ETF is up 11.38%.
Okay, so what do you think here about the dollar falling down below 100? Which, I mean, I'm so surprised it actually got there.
That was concerning. Obviously, 100 has been our support level for a long time now. We've seen it confirm as early as like July 2023. And the last time we've been down in this territory was obviously 2018 and both COVID in 2020. So, not exactly very promising. I'm again wanting to watch the dollar over the next week as well to see if we continue below 99.
Right. Yeah. So, and you were telling me that the dollar falling is like what we want to see for emerging markets to move up. So, if this trend is going to continue, those emerging market plays, which is a cyclical play, folks. Dollar going down, emerging markets going up. That's a play that you can run for a while if that's the trend. Do you remember, Mike, back over here when the dollar was near the trying to break 100 the first time, and we're like, hey, I was making the case that if we did actually break below there, that would be like one of the bull flags or bull signs for Bitcoin
For
to
Bitcoin,
hit
right?
all-time highs.
Mhm.
Then we got this bounce up, but the idea that we reversed it and now we're back down here is another feather in the cap of, hey, maybe
Could be
we are
could be
going to hit this
bullish for
play.
crypto for sure. Yeah.
That's right.
I think that was about the time in which you had an estimation that the dollar would rally to about 108 to 110, and you ended up being right about that one.
That's right. Yeah. That's okay, so we'll leave that before we actually move to some of the smaller news items. I think we should go ahead and thank our sponsor, Traders Post. Let's take a moment for that.
This video is brought to you in part by Traders Post. Tired of manually juggling your trades and worrying about code just to connect to your broker? Traders Post turns trade automation into a no-code breeze. Whether your signals come from TradingView, TrendSpider, or your own custom app, your strategy can run seamlessly across more than a dozen supported brokers and crypto exchanges like Tradeovate, TradeStation, and Coinbase. And when you're ready to scale up, Traders Pulse will be right there with you. Run multiple strategies, connect your prop firm accounts, or even share trade signals to thousands of your community members. Traders Pulse grows with you. Head to traderspulse.io to start your free trial and see how much easier trading can be when it's automated. That's traderspulse.io. Trade smarter, automate your edge.
So just to piggyback on that, I just want to make sure it's clear for everybody when you're watching. When you're looking at macro level news and events and reports, the way that we're talking about, you want to keep in mind that this can absolutely be used to back your trading, your discretionary trading and your automated trading. Um, as soon as you start understanding stuff like, hey, the spread between the 3 month and the 6 month yield can actually be a trend signal for your indicators, you start thinking of the world and the macro world as one of those underlying layers underneath your strategies. I don't know, Mike, if you've seen this inside of your career, but the idea of being able to switch from bullish to bearish, not just based on price action, but anticipated based on some of these macro levels, like the movement of the dollar, the movement of gold, correlation between different assets, can really be an edge to get you in the right direction earlier than you might otherwise.
For sure. I do keep track of correlations between assets. The global macro signals are harder to glean because a lot of those are lagging indicators. So price usually ends up taking precedence in at least my approach to markets. I want to see where markets are, where the sentiment shows up, particularly around volatility, speed of movement, and whether or not price is following a predictable linear regression trend, right? Linear regression is definitely something I use quite a bit, but the correlation between assets are an important one as well. The what often happens is price sends the signal first, and then the economic indicators confirm that price action was warranted.
That's true, but also something that happens is that if you're trading options, well, then when you're taking a look at the economic indicators that are coming out now, even though they're lagging, that's not generally necessarily priced into the option space. And so you can actually trade the volatility or use that as a signal if you're trading if your trade is longer term. Like you can still trade shorter term options, but expirations further out. And so you get this effect where a GDP report today might have more effect on where the options chain is saying that a recession is going to happen in a year and trade that now, which is how I made my first money in markets was understanding understanding the business cycle opened up opportunities for intraday trades today, which I find to be fascinating, and I want to see more of on Traders Post. I want people to be talking more about not just smart money contracts inside of Discord. I want it to be like, hey, the skew of the SPY is suggesting that in 6 months there's going to be an event. So let me go ahead and buy utilities and energy now as a play on that. So, anyways, I just find that to be super interesting and fascinating.
Sure. Yeah.
All right, so a couple of smaller news that happened over the last week. These don't warrant their full story, but we should mention them. Hype token breaks out. I keep looking for a breakout crypto token, and Hype from I think they're called the Hyperion Network, jumped up 21% this week, with traders and analysts eyeing more upside as speculative altcoins sentiments gain strength. Netflix surprises the street. Netflix crushed earnings after adding a record 19 million subscribers in Q4, pushing its total over 300 million. The stock jumped 10% as revenue hit 10.25 billion, and full year guidance beat expectations. Mike, do you remember a couple of years ago, actually during COVID, where Netflix was plummeting because they wanted to raise prices, stop people from sharing passwords, and Hulu and Disney Plus and all these competitors were coming out at the same time? Do you remember that stock just plummeting?
I do. It was actually an entry zone for me. I remember getting in around 170 something a share. And it was a perfect trade. And I didn't hold it long enough, but I did hold it for about a year and a half or so from that low.
Nice. Yeah. I'm actually quite surprised that Netflix is coming out of that hole because um, I swore to myself I wouldn't use Netflix again. And then here I am like a chump paying for Netflix month after month after month.
No, it was definitely a good play, and Netflix has continued to impress for sure, especially from an earnings perspective.
Cool. Crypto bill signed into law. So Trump officially signed a bill repealing the IRS DeFi broker rule. Have you heard about this? The idea that the requirements for platforms, decentralized platforms, to provide like KYC
Hmm.
has been diminished or all but removed in some locations.
Yep.
I find this to be super. I mean, I like deregulation in theory. I like deregulation. Um, but that he would pick this like, okay, let's just remove the requirements for KYC under these circumstances for DeFi platforms to allow more degenerate gambling. I go, this is on brand. This is on brand for the administration, but I guess I shouldn't be surprised that this and maybe many more of these things are going to happen. And to me, it's like, is this bullish crypto? That's like what I'm wondering about. Is will people be like, oh, the casino doors are open. Let me just go back in and put some more? Or are people like burnt by Solana and the pump dot fun stuff and burnt by the Ethereum alts that are just like dying on the vine because of how Ethereum is falling? Is this you bullish that they would deregulate the crypto space?
Definitely bullish for those who like to trade alts, because I think some of that activity shows up on dexes in droves that will still hit some of the tokens that are traded on centralized exchanges. So sure, I definitely would want to keep an eye on alts as a result.
Interesting. Well, that was way more quiet announcement than
Yeah,
well, because of the world was falling. We're in liberation. I don't call it liberation day anymore. I call it liberation year,
sure.
because I feel so liberated from stability and expectation and stuff like that.
Stable markets, right? Yeah.
Exactly. Florida bets on Bitcoin. Florida passed a bill to allocate 1.5 billion in state funds towards Bitcoin reserves. What is happening? The Bitcoin people are right. I don't like saying that. I don't want the Bitcoin people to be right. They're sort of like a-holes, the maxis. But the move puts Florida at the forefront of U.S. crypto adoption at the state level, sparking praise and backlash alike. So I like the idea that a bunch of states will start putting crypto inside of their as a reserve asset. I don't know what that means for the price of Bitcoin, but I was very surprised to see that happen. And then finally, discount retail.
Was there any
Sorry, go ahead.
indication on how much Bitcoin Florida currently holds? I know New Hampshire had a similar bill that they put forth. I'm just kind of curious. Like, the bill says that only up to 10% of certain state funds can actually be used to purchase Bitcoin. I'm just kind of curious where they're at right now on a percentage basis or even notional basis.
I don't know.
But that's definitely bullish. And it was a unanimous vote. So Florida is clearly very pro crypto. Love to see that.
I see. Well, let's see. Let's see. All right. So the final point there is discount retailers outperform. While broader market sell-offs happen, budget-friendly chains like Walmart, BJ's, and Dollar General held firm. Um, Analysts say investors are rotating into value plays as shoppers tighten their belts. This, folks, is another sign of weakness within the system. When you have consumer staples or lower cost assets that go up during bad news, it's a warning sign for a recession, or at least the market is preparing for recession. So that was pretty interesting.
Agreed. However, the ratio between value and growth is usually pretty damn short lived. If I can show my screen here, this is just comparing the value fund from State Street relative to the growth fund on State Street, and you can see that there was a period of time where value definitely was beating growth for a sustained period of time between early 2000s and 2008. But since that point, this has been like one of those decaying relationships that just gets worse and worse over time. And sure, you see these little spikes occasionally where values seems to be accelerating against growth, but then growth always ends up winning. Today is a very interesting candle in terms of this relationship because it's just showing value selling off relative to growth and things rotating back into the mega caps again.
Yeah, this is. I mean, one of these days we're gonna have to do a segment on the passive investment flows, which basically make it that if the unemployment rate doesn't like go up significantly, there's
Mhm.
just uh, these flows that are just coming into the market automatically, and then the whole thing that we jam on about Kim Carson, that the
Yep.
options are actually what move the market,
What moved
and
the
as
market
long as that gamma is positive, forget it.
for sure.
Yeah, value outperforming there. You'll get spikes, like you'll get these. You've shown me these like crypto level pumps in some assets. I don't know how you find them. Just unbelievable. Up 400%, up 500%. Oh my god!
Yep.
But if you're waiting for those inside of like non-index plays, unless you have a system like you do, like you're not really going to be sitting on finding it. I find
It's
that's
tough to
just too
find.
difficult.
Definitely tough to find, and value in general is definitely a tough one to really sustain over the long run. Growth just moves. Growth companies obviously move in price. Just look at what we just saw on Nvidia moving 30% inside of a week.
That's right.
That's insane. So
Actually, before I leave off, just to say there, we didn't even touch on the AI stuff. Can you believe we talked the whole show? We didn't say AI once. It's been crazy.
Well, you did now.
Um,
Now we got the buzzword checkbox.
right. But that's been one of the that to me is like one of the, what do you call it? I call them Frodo events, like when there's a thing happening in the background that ends up throwing the ring into the fire, then everything blows up. We can't measure the productivity that's going on right now with AI development, and so it makes me think like that's like uh, a spanner in the works, that all the plans, all the models that we have of what recession will look like, and what a depression might look like, and what the next 10 years might look like, it's totally up out of the window. But
Fair point.
yeah,
We'll
that'll
see as
wrap
earnings
that.
season starts to roll around again.
Yes, earnings season. God, my list. You're right. I had earnings season on my list. I didn't even mention that. That's like the next 3 months, because there are CEOs who are not reporting. They're not doing guidance. Some of them are not even doing earnings reports, or not like the investor calls,
Mhm.
because they're saying, we don't know what's gonna happen. We don't know what's going on with the tariffs. We're not going to give any information right now. Which to me is like, I've never heard of that. Like even during COVID, they were given some feedback.
Guidance. Yeah. It's rare to see that guidance gets pulled back or delayed, unless they're really trying to hide something, which is never promising.
Never
Um,
good.
I will say this, maybe this is a story for next week as well. We have the 13F filings coming out this week, and by next, I guess that would be Tuesday, the filings have to be completed. It's actually within a 45-day window. So between the 15th and the 30th of April. So I'm going to be keeping an eye on what the bigger institutional, super investors are buying over this last quarter. That to me is kind of one of the bigger signals as to whether we're rotating into small caps, rotating into value. The real question is, what are those guys buying? Because they tend to be leading the market. I know, interestingly, another headline was Warren Buffett being up, I think, 13.5 billion in overall value personally, while the rest of the major super investors were all down, hundreds of billions. And in the case of like Elon Musk being down 150 billion or so. So Warren Buffett wins again, and so I want to see what he bought in the first quarter as well. So that'll be something we can bring up over these next couple of weeks.
Wow, I didn't even know that. That's amazing. Does the 13F filings also tell you if they have cash on the sidelines? If they haven't
Yeah,
invested in
you
it?
can usually gather their total positions, including cash. The 13F filing itself is only to report changes in your securities, so anything you sold or bought. But cash can usually be gleaned by looking at the quarterly reports for Berkshire Hathaway. They tell you what they're sitting on in cash.
Got it. Okay, perfect. All right, so let's see here. That wraps up this high stakes after hours. Markets got rocked this week, but with a 90-day countdown in motion, this is just Act 1 of the Seven Sigma president. We'll be tracking it all: retaliation, negotiation, and maybe reconciliation. Until next time, stay sharp, stay liquid, and stay cool, because as traders, we don't just watch the news, we trade it. Thanks, folks.
Cheers, everyone.